Welcome back to Midcap Radar. Well, the first management of the show today is Aeroflex Industries. The company had a slightly subdued Q1. However, we have the management with us to discuss the prospects for the rest of FY26 and also their recent foray into the liquid cooling for data centers. We are now joined by Asad Daud, who's the MD at Aeroflex Industries. Thank you so much, Asad, for joining us. Well, first up, we'll start off with the numbers. FY26, a slightly subdued start along expected lines, so much uncertainty. But, you had earlier indicated that FY26 will grow better than FY25, which saw 15%, almost an 18% growth. So on the back of that, would you now revise your guidance downwards?
Yes, the first quarter was not as per our expectation, obviously because of certain parameters which is beyond our control. But as a company and our entire team is putting in all the efforts in order for us to achieve our targets for the entire year. So although first year was down, but with the new businesses and especially with the new sector that we are entering into, we are confident that we'll be able to achieve the targets for the remaining 3 quarters of the year. So I'm still optimistic for for achieving our targets for this year.
We'll be doing 18% revenue growth in FY26 and margins between 24 to 25%. Is that something which is achievable?
So in terms of our margins, our EBITDA margins for this year would be somewhere approximately in the range of 21 to 22%. The margins of 24 to 25% is expected over the period of the next 2 to 3 years. However, with like I mentioned, with our new capacities coming up, the bellows plants starting to see traction from the last quarter onwards, I think we'll be able to achieve our targets, especially in terms of our margins over the next few quarters.
Asad, you mentioned briefly the entry into the liquid cooling as far as the data centers is concerned. You also got an order of close to 7.5 crores from an American corporation. What is the corporation? Any more orders? What is the kind of pipeline that you're seeing in that particular space? And will it be restricted to the US market?
This is a long-term contract that we have signed with the company. The first order is the one that we have received. It's going to be supplied actually. So it is signed with the US with the Indian subsidiary of the US company, and the supply will be in India. So specifically, these are advanced flow control solutions for liquid cooling systems in the data centers. And this is just the first order as part of the long-term agreement that we have with the company.
Okay, so what would the total addressable market be here? What kind of investments will you have to make and the asset turn that you're expecting on that?
So if we see the entire liquid cooling, the market size for the liquid cooling in the data centers, that's approximately about $4.5 billion as of right now. It's growing at a CAGR of 20% year on year. So, by the math, in the next 5 to 6 years, this market would almost grow to 4 to 5 times, or almost to 20 billion by 2030. So we see a significant potential in this segment. And in terms of our investments, so a lot of our machineries from our bellows plant we are utilizing for this particular project. Also, we are procuring some new machines for that. Since it is a confidential agreement with with our customer, we'll not be able to share specific details in terms of capex or in terms of margins.
Understood that. But structurally, is it largely in line with the kind of margins or that you do with the rest of the business, with the rest of the customers, or will this be significantly higher compared to the core business? And the second question is, last time you had indicated that you expect quite a lot of demand coming in from the domestic market. Q1, that really hasn't panned out. Q2 and H2, how do you see the prospect pipeline? What are the kind of orders that you are bidding for?
So in terms of the margins, so the margins in the new segment will be in lines with what margins we have as a company overall. In terms of our domestic business, so actually, the domestic business has grown by almost 30%. in Q1. It is just that our export business has seen the decline, and hence that is the reason for the dip in the numbers of Q1. So we are seeing very strong demand coming in from the domestic business. Also, this new project would also help in increasing the sales of the domestic business because it's a domestic order. So we are extremely bullish on the domestic market, and we are seeing significant growth. We have already seen significant growth in Q1, and we expect this entire year to see significant growth in the domestic market. It is just the export market where, due to a lot of reasons, we had seen the decline, but we have seen that slowly. From this month onwards, we're starting to see a bit of normalcy coming in, and I'm sure in the next few months, with all the tariffs issues being resolved, I think we'll be able to see back on the growth trajectory very soon.
Okay, we take that point. Asad, thank you so much for joining us and telling us what can be expected from the quarters to come by. They maintain their FY25 guidance, and in terms of margins over the long term as well, between 24 to 25%. But with that, we'll slip into a break. Remember to tune into the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and Global Lens at 8:30 p.m.